Question 1. What is the key difference between short-term and long-term disability insurance? A short-term disability insurance covers only work-related injuries, while long-term disability insurance covers all injuries. B. Short-term disability insurance has a longer waiting period than long-term disability insurance. C. Long-term disability insurance typically offers a higher maximum benefit amount and a longer benefit duration than short-term disability insurance. D. Short-term disability insurance is typically available only for employees, while long-term disability insurance is available only for self-employed individuals. Answer: C. Long-term disability insurance typically offers a higher maximum benefit amount and a longer benefit duration than short-term disability insurance. Explanation: short-term disability insurance generally provides benefits for a short duration, usually 3 to 6 months, and has a shorter waiting period. It is typically intended for temporary disabilities. In contrast, long-term disability insurance is designed to cover a longer period, up to several years or until retirement age, and offers high benefit amounts. These policies are often used when someone cannot return to work for an extended period. It's important to distinguish between the two in terms of coverage duration, benefit amounts, and waiting periods. Question 2. Mr. Miller is a 45-year-old self-employed individual with no prior medical conditions. He recently experienced a disabling injury that left him unable to work for 3 months. He is considering purchasing disability insurance. Which of the following would most likely affect his premium rates? A. His age and occupation as a self-employed individual with no prior claims history. B. His marital status and number of dependents. C. His gender and whether he is a smoker. D. His geographic location within Texas. Answer: A. His age and occupation as a self-employed individual with no prior claims history. Explanation: for a self-employed individual like Mr. Miller, key factors that impact disability insurance premiums include his age and occupation. Younger individuals typically pay lower premiums, while older individuals face higher premiums due to the increased risk of disability with age. Additionally, occupations that involve high physical demands or risk factors may lead to higher premiums. Being self-employed also means he will need to purchase an individual policy, which tends to have different pricing structures compared to group policies provided by employers. Gender, marital status, and geographic location are less likely to impact premium rates directly. Question 3. Which of the following provisions would most likely be included in a long-term disability insurance policy to ensure the policyholder's benefits keep pace with inflation? A. Social Security offset rider. B. Cost of living adjustment COLA rider. C. Partial disability rider. D. Catastrophic disability rider. Answer: B. Cost of living adjustment COLA rider. Explanation: the cost of living adjustment COLA rider is a provision that can be added to long-term disability insurance policies to adjust the benefit amount periodically in line with inflation. This ensures that the policyholder's benefits retain their purchasing power over time. This rider is particularly important for long-term disabilities, as the insured may need benefits over several years or decades. The Social Security offset rider, while related, specifically reduces benefits if the policyholder is also receiving Social Security disability benefits. The partial disability rider covers a portion of the disability but does not address inflation. Similarly, the catastrophic disability rider provides additional benefits in case of severe disability but is not designed to adjust for inflation. Question 4. Which of the following is a key factor in determining the maximum benefit amount for an individual disability insurance policy? A. The individual's age and whether they have children. B. The individual's income level and the policy's benefit percentage. C. The occupation and whether the policyholder is smoker. D. The geographic location and state-specific regulations. Answer: B. The individual's income level and the policy's benefit percentage. Explanation: the maximum benefit amount in an individual disability insurance policy is primarily determined by the policyholder's income level and the percentage of income that the policy is designed to replace, usually around 60–70%. This is because disability insurance is meant to replace lost income in the event of disability. While age, smoking status, and occupation may impact the premium rates, they do not directly affect the maximum benefit amount. The benefit percentage is usually based on the pre-disability income. Question 5. What is the purpose of the elimination period in a disability insurance policy? A. To establish a waiting period before the insured can start working again after a disability. B. To determine the maximum duration the insured can receive benefits. C. To outline the amount of income replacement during a partial disability. D. To delay the payment of benefits for a specified period to reduce moral hazard. Answer: D. To delay the payment of benefits for a specified period to reduce moral hazard. Explanation: the elimination period in a disability insurance policy is essentially a waiting period before the insured begins receiving benefits. It serves to reduce moral hazard, ensuring that benefits are only paid for conditions that are truly disabling and not for minor or temporary illnesses or injuries. The elimination period varies by policy and may range from several weeks to several months. This is different from the benefit duration, which determines how long the insured will continue to receive payments after the elimination period ends. Question 6. Mr. Johnson has a disability insurance policy with a lone occupation definition. He is now disabled and cannot perform the duties of his current job as a surgeon, but he is still able to work in a different occupation. How does this affect his disability benefits? A. He will not be eligible for benefits since he can still work in another occupation. B. He will be eligible for benefits because his inability to work as a surgeon qualifies as total disability. C. He will be eligible for benefits only if his condition worsens, preventing him from performing any occupation. D. He will receive partial benefits until he can return to his original occupation. Answer: B. He will be eligible for benefits because his inability to work as a surgeon qualifies as a total disability. Explanation: under known occupation definition, a policyholder is considered totally disabled if they cannot perform the duties of their specific occupation, regardless of whether they can work in another occupation. This is beneficial for individuals in highly specialized roles like surgeons, as they would not be required to seek alternative employment in a less skilled job to qualify for benefits. This contrasts with any occupation definition where the insured must be unable to perform any occupation for which they are reasonably suited by education, training, or experience. Question 7. Which of the following is not typically a requirement for eligibility under a group disability insurance plan? A. Proof of full-time employment. B. Coverage for pre-existing conditions. C. Active participation in the employer's benefits program. D. Contribution to the premium by the employee. Answer: B. Coverage for pre-existing conditions. Explanation: while group disability insurance plans often require employees to be full-time workers and actively participate in the employer's benefits program, pre-existing conditions are typically excluded from coverage or subject to waiting periods in many group plans. Group plans often require employees to contribute to the premium, though the employer usually covers a significant portion of the premium cost. Pre-existing conditions are one of the most common exclusions in disability insurance policies, both group and individual, unless there is specific provision or waiting period for these conditions. Question 8. How does the Texas Department of Insurance (EDI) regulate disability insurance policies within the state? A. By establishing benefit levels and mandates for private insurance companies. B. By enforcing guidelines for employee participation in group plans. C. By ensuring that policies comply with the Fair Insurance Practices Act and ensuring claims are processed correctly. D. By determining the premiums that insurers can charge for disability insurance policies. Answer: C. By ensuring that policies comply with the Fair Insurance Practices Act and ensuring claims are processed correctly. Explanation: the Texas Department of Insurance (EDI) plays a critical role in ensuring that disability insurance policies are compliant with state laws, including the Fair Insurance Practices Act, which ensures that policies are fair and non-discriminatory. The EDI does not directly determine premiums, but it ensures that insurers operate within the bounds of regulations designed to protect consumers. Additionally, the TDI oversees the claims process, ensuring that claims are handled fairly and according to policy terms. Question 9. Which of the following is an example of a rider that can be added to a disability insurance policy to provide additional benefits? A. Social Security offset rider. B. Waiver of premium rider. C. Catastrophic disability rider. D. All of the above. Answer: D. All of the above. Explanation: each of these riders provides additional coverage or modifies the terms of a disability insurance policy. Social Security offset rider reduces the benefit amount if the insured is receiving Social Security disability insurance (SSDI). Waiver of premium rider allows the policyholder to stop paying premiums if they become disabled. Catastrophic disability rider provides extra benefits in the event of a severe disability that results in significant functional loss. These riders are added to customize the policy according to the needs of the policyholder, enhancing coverage in specific scenarios. Question 10. When considering tax implications, how are disability insurance benefits generally taxed for an individual policyholder? A. Disability benefits are tax-free if premiums are paid by the employer. B. Disability benefits are subject to income tax if the premiums are paid by the policyholder. C. Disability benefits are always taxable regardless of who pays the premiums. D. Disability benefits are not subject to any taxes under any circumstance. Answer: B. Disability benefits are subject to income tax if the premiums are paid by the policyholder. Explanation: if the policyholder pays the premiums for an individual disability insurance policy with after-tax dollars, the disability benefits received are typically subject to income tax. However, if the premiums are paid by the employer and are tax-deductible for the employer, the disability benefits are generally taxable to the insured. The taxation rules vary depending on whether the premiums were paid with pre-tax or after-tax dollars, and it is important for policyholders to be aware of the potential tax implications when receiving benefits. Question 11. Which of the following is a characteristic of long-term disability insurance compared to short-term disability (STD) insurance? A. LID insurance typically has a shorter elimination period than STD insurance, but LID insurance provides benefits for a longer duration, often up to the policyholder's retirement age. C. STD insurance covers broader range of disabilities than LID insurance. D. LID insurance usually has higher benefit percentage than STD insurance. Answer: but LID insurance provides benefits for a longer duration, often up to the policyholder's retirement age. Explanation: long-term disability LID insurance generally provides benefits for much longer period than short-term disability STD insurance, often up to the policyholder's retirement age, whereas STD insurance typically provides benefits for few months, 6 months to 1 year. LID insurance is designed to replace larger portion of income for an extended period, while STD insurance is for immediate short-term coverage. The elimination period for a LID is typically longer than that for STD. Question 12. Mr. Brown is employed in a high-risk occupation and he recently became disabled. His disability insurance policy excludes benefits for injuries sustained while engaging in certain high-risk activities. What type of exclusion is this? A. Occupational exclusion. B. Moral hazard exclusion. C. Catastrophic exclusion. D. Specific activity exclusion. Answer: D. Specific activity exclusion. Explanation: specific activity exclusions refer to provisions in a disability insurance policy that exclude benefits for injuries sustained during certain high-risk activities such as skydiving, extreme sports, or dangerous hobbies. These exclusions are included to limit the insurer's exposure to unusually high-risk activities. This is different from occupational exclusions, which exclude injuries or disabilities resulting from specific jobs or industries. Question 13. Which of the following statements is true regarding Social Security Disability Insurance (SSDI) and private disability insurance coordination of benefits? A. SSDI benefits are automatically offset against private disability insurance benefits without consideration for the policy terms. B. Private disability insurance benefits are reduced by the amount of SSDI benefits if the insured qualifies for both. C. SSDI benefits are never coordinated with private disability insurance benefits. D. Private disability insurance pays in full regardless of SSDI eligibility. Answer: B. Private disability insurance benefits are reduced by the amount of SSDI benefits if the insured qualifies for both. Explanation: when an individual is eligible for both Social Security Disability Insurance (SDI) and private disability insurance benefits, many private disability insurance policies include a Social Security offset rider. This rider allows the insurer to reduce the private disability benefits by the amount the insured receives from SSDI. This is done to prevent overcompensation and ensures that the individual's total disability benefits do not exceed certain income threshold. Question 14. Which of the following would be considered a partial disability under most disability insurance policies? A. The insured is unable to work in any occupation due to disability. B. The insured can work in their own occupation but at reduced capacity due to disability. C. The insured can perform all duties of their occupation but chooses to work fewer hours. D. The insured suffers from disability but continues to work in their original job full-time. Answer: B. The insured can work in their own occupation but at a reduced capacity due to disability. Explanation: partial disability refers to situations where the insured is still able to perform some duties of their occupation but not to the full extent they were able to prior to the disability. Partial disability benefits are usually a percentage of the total disability benefit. This differs from total disability, where the insured is unable to perform any of the duties of their occupation or any occupation, depending on the policy definition. Question 15. Mr. Allen has an individual disability policy with a 90-day elimination period. He has been disabled for 30 days and is wondering when he will start receiving benefits. Which of the following is correct? A. Mr. Allen will receive benefits immediately because he is disabled. B. Mr. Allen will receive benefits after 30 days as the elimination period is a waiting period. C. Mr. Allen will receive benefits after 90 days from the start of his disability. D. Mr. Allen must wait until the next calendar quarter before receiving benefits. Answer: C. Mr. Allen will receive benefits after 90 days from the start of his disability. Explanation: the elimination period, often referred to as the waiting period, is the amount of time the policyholder must wait after becoming disabled before they begin receiving benefits. In Mr. Allen's case, the elimination period is 90 days, meaning that he will start receiving benefits after 90 days of disability, not after 30 days. The elimination period is designed to limit the insurer's exposure to minor, short-term disabilities. Question 16. Which of the following types of disability insurance is typically offered to employees as part of an employer-sponsored benefits package? A. Individual disability insurance. B. Key person disability insurance. C. Group disability insurance. D. Occupational disability insurance. Answer: C. Group disability insurance. Explanation: group disability insurance is commonly offered as part of an employer-sponsored benefits package. It covers employees collectively under a single policy, usually at a lower premium than individual policies. Group disability insurance often covers both short-term and long-term disabilities. The employer may contribute to the premiums, but employees may also be required to pay a portion of the costs. This type of insurance is not specific to individual employees and does not require medical underwriting. Question 17. Which of the following riders on a disability insurance policy allows the policyholder to continue receiving benefits if they return to work on a reduced basis? A. Waiver of premium rider. B. Return to work rider. C. Social Security offset rider. D. Cost of living adjustment COLA rider. Answer: B. Return to work rider. Explanation: a return to work rider, also known as a partial disability rider, allows policyholders to continue receiving benefits if they return to work on a reduced basis or in a different capacity due to their disability. It is designed to provide financial assistance while the insured transitions back to work part-time or at a reduced earning level. This rider ensures that the policyholder is not penalized for returning to work in a limited capacity and can still receive partial disability benefits. Question 18. In the event of an insured individual returning to work after a long-term disability, what is typically required by most disability insurers to confirm that the individual can resume their duties? A. A vocational rehabilitation report. B. A letter from the employer indicating a return to work. C. A physician's note confirming the individual's ability to work. D. Formal training session to demonstrate their readiness to work. Answer: C. A physician's note confirming the individual's ability to work. Explanation: most disability insurers require physician's note confirming that the insured is medically able to return to work after being on disability. This medical certification is critical to ensure that the individual is fit to resume their duties and that their return to work will not cause further harm. While vocational rehabilitation may be part of the process, it is the physician's assessment that is usually the determining factor in ending disability benefits. Question 19. Which of the following best describes a moral hazard in the context of disability insurance? A. The risk that an insured person may exaggerate the severity of their disability to receive benefits. B. The risk that an insurance policy will not cover a new medical condition. C. The risk that an insurer will go bankrupt and be unable to fulfill its obligations. D. The risk that an insured person will not receive benefits because of misreporting. Answer: A. The risk that an insured person may exaggerate the severity of their disability to receive benefits. Explanation: moral hazard refers to the risk that a policyholder may act in a way that increases the likelihood of a claim or exaggerates the severity of their condition in order to receive benefits. Insurers try to mitigate moral hazard by requiring thorough medical evaluations and imposing elimination periods. This is an ethical concern in the industry as it can lead to fraudulent claims. Question 20. What is typically the purpose of the exclusion period in disability insurance policies? A. To provide coverage for specific illnesses that are pre-existing. B. To prevent insurers from covering certain types of disabilities that are likely to occur. C. To temporarily stop benefits until a health condition is no longer considered pre-existing. D. To allow a waiting period before the insurance coverage starts. Answer B. To prevent insurers from covering certain types of disabilities that are likely to occur. Explanation: the exclusion period is a part of many disability insurance policies, particularly for pre-existing conditions. It is designed to prevent coverage for conditions that are likely to occur during the early stages of the policy or that the insurer deems too risky based on medical history. The exclusion period helps mitigate moral hazard and allows insurers to manage high-risk situations. Question 21. Which of the following statements is true regarding the lone occupation definition of disability in disability insurance policy? A. The insured must be unable to perform any occupation to qualify for benefits. B. The insured must be unable to perform their specific occupation to qualify for benefits. C. The insured will only qualify for benefits if they cannot perform tasks at home. D. The insured is eligible for benefits only if they can perform manual labor. Answer B. The insured must be unable to perform their specific occupation to qualify for benefits. Explanation: the lone occupation definition of disability allows the insured to qualify for benefits if they are unable to perform the duties of their specific occupation, even if they can work in another job. This is a more favorable definition for policyholders compared to the any occupation definition, where the insured must be unable to perform any work for which they are reasonably suited. Question 22. In Texas, what is the minimum number of employees required for an employer to offer group disability insurance to their employees? A. 1 employee. B. 2 employees. C. 5 employees. D. 10 employees. Answer B. 2 employees. Explanation: in Texas, group disability insurance can typically be offered to an employer's employees if the business has at least 2 employees. Group insurance policies are commonly more affordable and provide coverage to a larger number of employees, making them accessible for small to medium-sized businesses. Question 23. Mr. Johnson's disability policy has residual disability provision. What does this provision typically provide? A. Full benefits if the insured is partially disabled. B. Partial benefits if the insured's income is reduced due to disability. C. Benefits only if the insured cannot work at all. D. Benefits for specified number of weeks after the disability ends. Answer B. Partial benefits if the insured's income is reduced due to disability. Explanation: residual disability provision in disability insurance policy provides partial benefits if the insured is able to work but experiences reduction in income due to their disability. It typically covers percentage of the income lost as a result of the disability, rather than providing full benefits for partial disability. Question 24. Which of the following would be considered a total disability under most disability insurance policies? A. The insured can perform the duties of their own occupation with modifications. B. The insured cannot work in any occupation due to the disability. C. The insured can still work part-time in their own occupation. D. The insured is able to perform some duties of their occupation but with limitations. Answer B. The insured cannot work in any occupation due to the disability. Explanation: total disability typically refers to a situation where the insured is unable to work in any occupation for which they are reasonably suited by education, experience, or training. This is more restrictive than lone occupation disability, which only considers the ability to perform the duties of the insured's specific job. Question 25. Which of the following is generally covered by a disability insurance policy with a non-cancelable provision? A. The insurer can increase premiums at any time during the term of the policy. B. The insurer cannot cancel the policy and cannot raise premiums during the policy period. C. The insurer can cancel the policy after 12 months if the insured's condition improves. D. The insured must renew the policy annually for continued coverage. Answer B. The insurer cannot cancel the policy and cannot raise premiums during the policy period. Explanation: a non-cancelable policy means that the insurer cannot cancel the policy or increase premiums during the term of the policy. This is a highly beneficial provision for policyholders because it provides long-term stability and certainty regarding the cost of the insurance. Question 26. What is the main advantage of adding a cost of living adjustment COLA rider to a disability insurance policy? A. It provides additional coverage for medical expenses. B. It increases the benefit amount to keep up with inflation. C. It reduces premiums after the first year of the policy. D. It allows for flexible premium payments based on the insured's income. Answer: B. It increases the benefit amount to keep up with inflation. Explanation: the cost of living adjustment COLA rider automatically increases the benefit amount of the disability insurance policy each year based on inflation. This ensures that the insured's benefits keep pace with the rising cost of living, helping to maintain the purchasing power of the disability benefits over time. Question 27. In Texas, which of the following is true regarding individual disability insurance policies? A. They are more expensive than group policies but provide more customized coverage. B. They cover only work-related disabilities. C. They are typically issued with a shorter elimination period than group policies. D. They require fewer underwriting requirements than group policies. Answer: A. They are more expensive than group policies but provide more customized coverage. Explanation: individual disability insurance policies are typically more expensive than group policies because they offer more personalized coverage and are underwritten based on the individual's health and occupation. Group policies, by contrast, are often more affordable but provide less flexibility in customization. Question 20. What does the elimination period in disability insurance policy refer to? A. The time period during which the policyholder is not eligible for benefits. B. The time the insured must wait after becoming disabled before benefits begin. C. The time period after which the insurance policy terminates. D. The period during which the insurer evaluates the claim. Answer: B. The time the insured must wait after becoming disabled before benefits begin. Explanation: the elimination period, also known as the waiting period, is the period of time that must pass after the insured becomes disabled before they begin receiving benefits. This period is usually expressed in days such as 30, 60, or 90 days, and it helps insurers limit the costs of short-term claims. Question 29. Which of the following is not typically excluded from disability insurance coverage? A. Injuries resulting from war or terrorism. B. Disabilities caused by self-inflicted injuries. C. Disabilities resulting from a car accident. D. Disabilities caused by a pre-existing condition that develops after policy issuance. Answer: C. Disabilities resulting from a car accident. Explanation: disabilities caused by car accidents are typically covered under most disability insurance policies, assuming the accident is not due to the insured's gross negligence. On the other hand, injuries resulting from war, self-inflicted injuries, and certain pre-existing conditions are often excluded or limited under standard disability insurance policies. Question 30. Mr. Hart purchased a disability insurance policy with a 24-month benefit period. After 18 months of receiving benefits for his disability, he recovers and returns to work. What happens to his benefits after the 24-month period ends? A. The benefits will continue for another 12 months after recovery. B. The benefits stop immediately once the insured recovers. C. The benefits will continue as long as the insured remains partially disabled. D. The benefits will continue until the policyholder reaches the maximum benefit amount. Answer: B. The benefits stop immediately once the insured recovers. Explanation: most disability insurance policies specify a benefit period, which is the maximum length of time that benefits will be paid. If the insured recovers before the end of this period, they typically stop receiving benefits. In this case, since the insured recovered and returned to work before the benefit period expired, the benefits would stop immediately.